I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermuelen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, the U.S. Fed just came out and told us that they're not going to be hiking their rate anytime soon. What's the reaction on the market and your reaction to that?
Yeah, there really wasn't much of a reaction at all today, really across the board. The only thing really moving, I guess there is one thing moving, which are precious metals. They are selling off in the miners today, but in terms of the U.S. dollar currency itself, it really didn't have too much of a move from the open price this morning, only up about 0.2%. So had a little intraday volatility during the news, but nothing significant. And the market really, I think, was anticipating it because, the equities, we didn't see any big intraday swings on the equities. So it just looks like the metals and miners are under pressure today. And the dollar, I'm still very bullish on the dollar. Whether they raise rates or not, I think the dollar is going to continue to work itself up. Last week it hit 98 on the index chart, which is our first target. I'm still expecting 99, even 100. So if the dollar does continue to go up there, I think it'll continue to keep some downward pressure on the precious metals for a little bit. But overall, metals and the dollar, I think, are still seen as a global safe haven, and I think they'll do very well going forward.
Mm-hmm. Now, when you look at currencies like the Canuck buck, which is under 75 cents U.S., is there downward pressure on the loonie?
Yeah, well, the loonie's been under pressure for quite a while. It's still in a really strong downtrend, and it's at the point here where it could very easily roll over and go back down to some new lows. We could see 73. We could maybe even see it tag all the way down to 72. So at this point, until it has some strong rally that can break the 76, 77 area, I'm still bearish on it, and I think it could continue to fall in value here.
Is it a surprise the Canadian dollar has been falling while crude has been relatively strong?
Usually we see the Canadian dollar move more with oil, and it has kind of really decoupled in the last little while because crude has been on a tear to the upside. And the dollar, it did originally have a little bit of a bounce, but it has been flagging and kind of pulling back. So it's interesting that it's not following quite as much to crude, but overall, it's in a downtrend. It is definitely not. It's disconnected from crude at the moment, and I think it could very easily stay where it is or go lower. I'm more neutral to bearish on the Canadian dollar.
We'll have more with Chris Vermuelen right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Chris Vermuelen. Chris, what's your outlook for the major equity markets?
Well, the equity markets, they're getting pretty overextended. We haven't seen a rally like this, I don't think, ever from the December lows. It's a very strong first quarter. Continues to muscle itself up. The SP 500 keeps tagging all-time highs this week. The NASDAQ hit all-time highs about a week ago. The market to me is just, we're almost like, it feels like we're in summer doldrums, and the volatility is very low, and price is just doing this very slow grind higher. And we've seen this before, actually very similar to what we saw back in last August, September area, and we're setting up for the market to have some type of cleansing of itself, meaning we'll probably see a week that has pretty significant selling. We'll see distribution selling step in, and I think we could see price get clobbered. I don't think it'll be huge. I think we could see a 3-4% pullback that could happen very quickly and within a week, and at that point it would reset the market, and it could very easily continue to go up. But the question is, when it does pull back, is it going to form a bottoming formation and continue to go higher, or is it going to break down from that pullback, which could trigger a much bigger sell-off? So I'm really nervous at these lofty levels. I think any day we could have a huge sell-off, a 1 or 2 day bout of selling in the market. We could see the broad market down, 2-3%. It could be one of those crazy type of correction days. So there's a lot, I think, kind of at risk at this point. But looking at equities as an investor, the trend is still up. We're making new highs, and it hasn't had a correction in a month or so, and it's due for a little pullback at least before really adding new money here.
Is this going to be a classic sell in May, go away?
It feels like it. The good old saying is, it doesn't always happen, but it feels like the market is primed and ready, and it depends on what you consider sell in May and go away. We might have this sharp 2-3% quick drop that happens, and that might be it, and then it continues to run for the rest of May. It doesn't mean that May will be a down month by any means. So we really need to see how the daily chart is going to unfold over the next couple weeks. If we get a pullback, and how that pullback kind of forms a pattern in the charts, and what other sectors are doing, leading and lagging sectors and the safe havens, because that's going to tell us where the smart money is starting to shift and where investors have their mindset. And that can kind of tell us where we think equities, if they're going to move up to new highs again, or if the big money behind the scenes are preparing for a bigger decline in equities. So we just have to watch it day by day, let things unfold, and compare various sectors and asset classes.
Is this a case of looking at individual stocks very carefully and not just sectors?
Yeah, we are getting somewhat into that stock picking type of market where some sectors are just underperforming and others are outperforming. We saw a big bout of selling in Google yesterday. It's not a good sign when we see huge selling in some of those big leaders in the big tech. But overall, you do need to be watching various sectors and see where things are going. I really like utilities at this point. They seem to be forming a base and on the verge of moving higher. I think as money becomes fearful that a correction in equities are coming, we're going to see money move into utilities, a lot like we saw back in October, November. When we saw the stock market sell off last October, November, utilities actually rallied and poked up to some new highs. And I feel like that's what's going to happen again. Utilities have been holding up well. I think they're going to start to get the safe haven money, and the equities market might actually have a pullback and go against what the utilities are doing. So I like utilities a lot. But if we do get a follow-through sell-off late in May, you don't want to be in utilities because they'll get pulled down like they did last December. But at this point, utilities, I think, are the kind of the safe haven play for money right now.
Are transport still considered the canary in the coal mine that can tell you what might or might not happen?
They are. They're not as strong as they might have used to be. There's so many other sectors that kind of can move around. But yes, transports are definitely a good indication of kind of global supply and demand or these sales going. If there's a lot of transportation stocks doing very well, usually that's a sign that the economy is strong. I mean, we haven't seen the transports really outperform the market at all. It's been trading sideways. It actually looks more bearish at this point. It's up near resistance. It's at a previous high that it's made several times back in 2018. So we'll have to see how this how it shakes out over the next little bit. If it starts to break down, or if it's going to start to rally up and break the $200. Looking at the IYT Transportation Index, if it can break the 200 mark, that would be a very bullish sign for the transports. Right now, it's at 193, and if we can get above that 200, that's a really good sign. If it can close above there on a weekly basis, I think that's a good sign that there's still good order flow. I think there's good sales going on, and we could continue to see the equities market push to new highs again, or continue pushing to new highs for a little while longer.
Is the tech sector what's supporting the markets right now?
Well, it's crazy. If you look at the tech sector weekly chart, I mean, there's only one red bar, more or less, from from January. It's been week after week to the upside. It is most definitely supporting the market. Continues to just climb this never-ending, 45-degree angle. So there's no doubt it's supporting it. Obviously, if the big tech companies start to show some distribution selling, which we haven't really seen yet, then it's a sign to be worried. But at this point, again, the markets are still in a raging bull market. They're testing highs. They're ready for a pause and a pullback. We haven't had that yet. And after that, I think it'll be a great opportunity to step back in as a short-term trader, because I think the markets are still going to try and push up to another all-time high later this summer.
When Amazon hit the $1 trillion capitalization mark, there was a lot of fanfare. Microsoft has now hit the $1 trillion mark. Not a lot of people saying much about that. Is $1 trillion now not a big deal anymore?
I know. Yeah, I was looking at the Microsoft stock last week. It's amazing that chart. It just, we used to hear everything about Microsoft, and really you hear absolutely nothing about it anymore, or I don't. And it's just like a sleeper stock, and it's really taken off, and it's gone, parabolic in the last week alone. It just popped and took off to the upside. I think they're doing extremely well. They've got great services. I use all their services. I mean, they finally, I think, have it figured out, and they might not they're not super popular in the media, but I mean, for long-term investors, they're just drooling and loving owning the shares.
We'll have more with Chris Vermuelen right after this.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermuelen. Chris, what do you expect is going to happen in the crude oil space?
Well, crude oil is, it's rallied up. It's hit $66 a barrel on the continuous contract, which is a really significant level looking back over the last year and a half. And I've had an upside target of $66 to $67 a barrel, where we should see some pretty big sellers step in and push prices down, pull prices down. And we've seen that. It got up to 66. We saw some big selling step in, drove crude back down. And right now, crude is kind of just hanging on a limb here. To me, I think best case scenario is we see crude move back up to 66, maybe 67, and then sell back down again. I think it's going to form a topping formation over the next couple of weeks. If it doesn't do that, I feel as though it's going to break down potentially in the next couple sessions, and we're going to see $61 or $60 a barrel for that. So I am bearish to neutral on it. I think most of the upside here is done. We're into really big overhead resistance, and I feel as though that is what's going to unfold based on the current volume and momentum and resistance levels.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermuelen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. You're listening to HowStreet.com Radio. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.